What up, everybody? Welcome back to Royal Blu FX. In today's video, we're going to talk about market structure. I know a lot of my videos tend to talk about market structure because market structure is really the key to trading the market correctly. If you don't know structure, you're not going to be able to trade correctly. All right, so in this video, however, we are going to talk about the correct type of market structure. I feel like a lot of people out there tend to confuse structure, right? And what I mean by essentially is something like this, for example, for example, this low here, right, created the new high. It broke this previous high, right, this old high here, and made a higher high, right? But then a lot of you may also see something like this, where you see lows and highs, lows and highs, lows and highs right here, right? And you're thinking, okay, well, this low actually broke this high, right? And you're probably thinking, well, which low actually caused this break, this break of structure up here, right? Was it this low or was it this low, right? What am I following exactly, right? And that's what you guys really need to be understanding here fully, because a lot of you may think, okay, well, this was the low that broke that high, so therefore, yes, I'm looking for buys to come down to this low to go bullish, right? But then in retrospect, this can also be wrong, actually, because the real answer here is actually this low right down here. Okay, so because structure is fractal, okay, price shows itself in so many ways, in different ways, right? In your major structure low, major structure high, and your minor low, minor high, right? It also shows in your micro lows and micro highs right here, like micro lows, micro highs, micro low, micro high, right? And so forth and so on, just like this. These are micro lows and micro highs, right? So one thing is for sure is that you need to be able to mark your structure out correctly. And the way to do that simply is by understanding all your structure, right? So let me just kind of show you here in a quick little example here. In a simplest way to do this and to identify this correctly. Okay, so anytime price does this, right, something like this, all right, something like this, all right, whenever you're breaking the major structure high, right here, you should always understand that the major structure high, this low here, belongs to the major structure high here. It always does, okay? And because of the fractal nature, let's just pretend this was, say, the 15-minute time frame, right? Or maybe even the 1-minute time frame. Let's just pretend that this was the 1-minute time frame. If you go all the way up to the 4-hour time frame, you will most likely see lows and highs like this, right? Just like this. You will see lows and highs going up like that. Let me just make that a little better, from here to here, like that. Okay, and when you see highs and lows like that, right, on the 4-hour, you definitely know that even the 4-hour low has to mitigate, right? The 4-hour low has to mitigate, like right here, for example, right? And this next low right here that needs to mitigate, right? So if we go on the lower time from the 4-hour down to the 1 minute, let's say, and let's say all this was the 1 minute right now, and you're seeing everything in detail, right? On the 1 minute, you're obviously going to be seeing lows and highs create as well, right? Just like this. However, the real question is, who broke this high? Was it this low or this low, right? The real answer here is it was this low, right? This is the low that led the market going bullish here to break this high. Now, let's talk about these lows and highs right in here, right? These little lows and highs in here belong to this main low, okay? They belong to that main low, and that's it. That's all you guys need to really know, is that these lows and highs belong to this main low, okay? If this main low in here is broken and gone, let's just say price does this, goes up and breaks, right? Now we have the first major low broken, right? And we have internal structure in here now. Okay, so what this means is if the major low goes right in here, that means price is shifting. It's going bearish now, right? But if prices do something like this, right, break the internal structure like this, okay, this doesn't mean that price is reversing. It doesn't mean that price is actually trying to go bearish now, right? It is going bearish internally speaking between this low and this high, right? but it is, however, retracing for the time being until price reaches the demand zone, and then we anticipate and wait for price to excuse me, break the new high, for price to retrace again, do the same thing, right? Respect the demand zone to continue price bullish, just like this. Okay, so that's what we're really looking for at all times. So to go back to this piece of structure here, this low and this high. Okay, a lot of you may be saying, okay, great, now we made this low actually broke this high. It's not the case. This low never actually broke that high. In fact, it was this low that broke this internal high right there. Okay, so the way structure is mapped out, okay, and created is based on that time frame's low, structure low, and structure high, or structure high and structure low. Okay, now if that doesn't make any sense, again, I just want to iterate that this low, if we're on the 4 hour, okay, you won't be able to see all this detail right there. You won't be able to see any of this. Okay, so what you'll be able to see most likely is just a low and a high created, right? Just like that. Okay, so we know that this low belongs to this high. That's all you need to know, right? And then we go on the 1 minute. Now you see more detail, right? The 1 minute is also pushing bullish, right? We can obviously anticipate and say to ourselves, okay, well, price broke a new old high here, internal old high, right? And so, of course, when prices retrace, yes, we can look for confirmations here, right? We can look for confirmation here for price to reverse and continue bullish, right? However, never forget that you are trading price in a premium zone, right? From this low to this high, right? Like that's actually, that's not in premium in here, but if it was in premium, right? Let's just say price maybe even above here, right? Something like that, right? You never, and the reason why I say in premium, right, is because prices are too high, obviously, right? They're too high, they're not below the discounted area. So you always want to pay attention to this, even if you don't have the fibs like this, right? Even if you have something like this, right, and you're thinking, okay, well, price just broke this high, now I'm still anticipating to buy here, right? And that can be good or bad depending on what price does on this demand zone. However, I would always wait for prices to go and manipulate others, like just like this, to go continue for other people to think that price is going bullish, right? Then for price to come back down here, for price to then continue bullish, right? So I don't care what's happening in the internal area here. I always need to pay attention to what's happening to the major low and major high, because the major low, major high the major low, major high is how price moves. Okay, the internal structure is what creates the major low, major highs. Okay, so once the major high is created, major low is created, right? Now we have a confirmed range, and now we're looking for prices to come here, for prices to extend. So I hope you guys understand that in my drawing. If you didn't, I'm going to go right here on the live chart example, and we're going to talk about it just a little quick so you guys can quickly understand and see what I'm talking about. So let's look at this. Okay, let's look at here. Actually, let's even go maybe on the 30 minute, perhaps, maybe even the 4 hour. Perfect. Okay, so right here, since we're going to be trading from the 4 hour and we're going to be going all the way down to the 1 minute, I want you guys to see this. The way price is moving right now is lows and highs, right? Lows, highs, lows, highs, lows, and then highs, right? Everybody can see that, right? Okay, so again, the way you mark out the market structure is based on the low that broke the current high, just like this, right? So now we know that this low here was the one responsible for this break of structure. So this is that low, right? Once price breaks this low, we're looking for price to come back to where? Back to the same low, just in here, right? Back to mitigate to continue bullish, right? A lot of other traders, however, are looking to buy in here. Let's go in here. Look at this. Let's go down to the 5 minute, I think it was. Look over here. Just right here. Actually, let me go back to the 30 minute, for example. Hold on 1 second, where I just lost my position. 4 hour is right there. Right, okay. Let's just mark this demand zone right here. Okay, so I want to show you guys, let's go back down to the 30 minute. Okay, And notice how from this low here, everybody's going, prices going bullish, breaking this high here. Let's go down to the 5 minute, right? If we're down to the 5 minute, notice how we have low and high, right? A lot of other traders are thinking, okay, well, this is the next buy here because this is a demand zone, which in fact it is true. It is a type of demand zone. However, whenever price breaks the high, never assume and think that this is the low that caused this break of the structure of that high. It was not, right? It was this low right there, right here. Because this is the low, the last low that came right here internally, right? You can see here there's your sell to buy. So this would be considered our flip zone right here, right? That caused this high break of structure right here. This was the low that caused the break. This one is internal to this low, this high, this low to this high. However, this low here belongs to this main low. So we know that if this low represents this low right here, which means that when you see price being mitigated right here, when you're seeing going low, high, right, just like this, price is mitigating in here, right? Price is breaking the new high now, price is mitigating like this, right? And then continuing, right? We see prices have mitigated here. So now this low here is representing this main low here because everything has been mitigated. So now we know this is the next low in Q right here, okay? So let's continue here. I want to show you something right over here. Let's go to the 30 minute, right? Right, so in reality, we would be waiting for this low here to mitigate the market, right? Now notice how, again, in here, we're in the 30 minute, we're on 30 minute. You can see how there's a low, there's a high, there's a low, there's a high, right? Everybody's saying, okay, well, there's a break of structure, so I should be buying here now because this is where price is, right? We're not going to even pay attention to this demand zone, right? And this is the incorrect way to look at it because price now will take that out, right? Just like that, right? And then continue from this demand zone right here because this was the next demand zone based on this low to this high right here, right? And we know that this is the next low for price to come into because this low here mitigated this demand zone right here, right? So from this point of view, right, once price mitigates, what do we do from here? Well, we want to jump down to the lower time frame, right? Oops, I think I went way too far. I did. Okay, let me zoom out here. Where was I? Let me just go back here. Let me just find my place. It was right there. Okay, I think it was right there. Yeah, right here. Okay, so let's go all the way back here. So now that you see all this over here, right, price mitigated, okay, we want to see where the next low is, right? This is that next low, and we're anticipating for this low now to break this high right here, right? And we're not going to say to ourselves, well, let me just speed this up and I'm going to show you this right here. Okay, let's speed it up a bit. There we go. Oops. Okay, there we go. All right, so now we're not going to say, oh yes, it was actually this low right here that broke that high, even though it did. However, notice what's happening here. We have new right here, new structure, right? This was a high that was broken, right? When price broke this high, came back and mitigated this low. Now we have another internal structure breaking the high, price running up, coming back down here, right? So we're actually looking at this low as the main low that broke this high, and everything internally is creating just like this, right? Internal structure, internal lows, internal highs. So we know that the next internal low in here should be mitigated to continue bullish because we had a break here and now we had a break here. Let's go down to the 5 minute just to show you guys what I'm talking about here. Right here, right? Notice how structure, actually the swing point started from here. You can see it right there, break, right? From this break right here, okay? And then you see another one from this low right here to this high. Price comes, sweeps liquidity, mitigates, and continues from here. And now we have from this low all the way to this high. because now this low is the one that was responsible for this break, right? It wasn't just this low, it was this low. This is that low to that high, so we have a complete range in here, right? And so once we have that complete break of structure, now we have price saying, okay, we need for price to continue mitigating the internal structure, which is here, right, in order to continue bullish, because we just had all this previous structure mitigated right here. Everything's being mitigated. So this is that next buy that comes into play right here, right? So that's how structure is done, guys. Don't ever get it confused. Never think to yourself, okay, well, it was this low that actually broke this high. No, because this low here broke that high. This low did not break this high, right? I mean, it didn't do it yet, obviously, but let's play it from here. Okay, there we go. All right, so notice what happened here, right? Price broke, right? And look, notice right over here how price actually came back to that demand zone, because when price broke, it just left liquidity. Lows, lows, right? People are buying way too early, price reverses and continues, right? So the next break of structure, right? There's the two types. There's that, the internal, right there, and then we have the external high broken right there. So now what we're thinking about here is, okay, if I was to look for buys, where's the best buy, right? Where's the best buy to look for, right? It should be down here, right? Right down here, because this is the low that broke the high, okay? However, you can also look at this low as well, because this low actually caused this break. However, you are in the premium, I believe you're in the premium, yes, you're in the premium side of things like this. Therefore, price may not, this isn't a high probable entry, right? A high probable setup. Price may fail from here, right? But it doesn't mean that price can't work out either. So we can always go down here, right, and look for confirmation, obviously. So let's just go here and show you guys, okay? Notice what price does, right? It gives out. And the reason for that is because a lot of traders are up here now waiting for prices to go bullish, right? You can see how prices have been bought here and they failed. So this would be cause that flipped. This would be a flip for us, right? For price to sell off. And where is it selling off? It's trying to come all the way down to the demand zone, right? All the way down there. Okay, this time it didn't. This actually, let me see, hold on a second. Right there, if I do this properly, there's the last sell pressure down there. However, this is a buy to sell, which means this would be a flip zone right there. Okay. That would have been a flip zone. Anyway. Oh, that's it. Okay. So, guys, I hope you guys understand what I'm talking about, right? Structure mapping is really important. Understand which low caused the break of the high, or which high caused the break of the low, right? Like, let me just do a few over here for you guys. This low right here caused the break of this high there, right? So we're anticipating for price to come back all the way back down here, right? Right. Who caused this break? It was this low, right? This whole low. So we have this low to this high now, right? You're not going to start buying from here now, like the others were doing right here, right? You're going to wait for price to get back here now. And there's your next buy, right? Once that buy happens, right, you wait for this high to be broken. And once that high is broken, you look for your last sell to buy, right, or your last order block. In fact, it would be right there, because I see it clearly right there, right? And so on and so forth, right, guys? That's how structure mapping is done. Right, so that's it. I hope you guys enjoyed this video. I hope this was informative, and I hope you guys liked it. Please let me know in the comment section what you guys thought about this video. If you guys need any questions answered, I will answer anybody's question anytime. Just hit me up and I will comment anytime. All right, guys, until then, I will talk to you soon.